You'll never change your life until you change something you do daily. The secret of your success is found in your routine. I think this is repeated over and over again in performance-based fields is you can't change your outputs without changing your inputs. However you define a setup for yourself, a stock must exhibit that to go on your weekly focus list. Otherwise, you're focusing on a stock in the middle of nowhere with no clear edge, no clear setup, no clear entry tactic, no clear framework that you're using to manage risk at the end of the day. So there must be a clear setup forming, and to focus on a stock, it should be within a few days of completing a setup / triggering an entry tactic. Why is a trading routine important? Most importantly, a regular routine is what keeps us highly in tune with the market and the process of rotation among its leadership. You want to skate where the puck is going. People always say, how do you analyze rotation? It's about doing a routine every day and noticing subtle shifts in multiple stocks breaking out of a same group, noticing inflows into an ETF outperforming on a down day. Those are the subtle clues that you'll only pick up on if you do a routine every single day. So building a screen, there's 6 key steps. First, define the purpose. Be very clear with that. Identify model stocks that kind of represent a good avatar for that defined screen. Define characteristics that break down those avatar screens based on fundamentals, based on technicals, whatever is relevant to the purpose of that screen. Create a first iteration, analyze the results, and then update the criteria and just repeat and do this in a cycle until it actually meets what you want. A daily routine is essential to perform and stay in tune with daily market action and build consistency in your trading. Everything we're talking about, from going from stage 1 and stage 2 to stage 3, a huge part of that is consistency in inputs and getting better inputs and building structure around those inputs. So a daily routine is critical for that. It keeps you focused, helps you execute, keeps you in tune with the market, identify rotation, and gives you a daily check-in on the market health. So this is the relative strength line here of PLTR, and it began an RS phase on this day right here, well before it broke out through this pivot. So we're always looking for stocks that are in existing RS phases and then pull back to moving averages, form a tight range, gap up, pop up, set up some type of other entry tactic or setup when they're already in an RS phase. That's a key thing to look out for. Screening routine is the structure that sets you up for success. The 2 goals of screening are to find new ideas and monitor the market environment. And as you screen, be detective. Where's the money flowing? What are the strongest themes? What are the strongest stocks I should be focused on? And then create a daily and weekly routine which catches the stocks likely to be market leaders. Welcome everybody. We're now into the screening and routines webinar. It's amazing we've already done all this much, but there's still a lot to go as well. And the last few webinars can be really fun. Writing trading rules, trading analytics, analyzing trades, building a model book, building new edges, and then of course the launch webinar on the day of the book release. So for those of you who have been with us for quite some time, thank you guys for joining once again. For those of you that this is the first time, definitely go ahead and watch the previous ones on YouTube. We'll probably have the link sent out by email later today where you can access all of them. I think this is probably one of the best resources that you can use if you're a beginning trader to get up to speed, build your first trading system, along, of course, with the book. These are very complimentary, and we're excited to get this out to you guys on May 27th. So here is the link to actually order your copy, and let me know in the chat right now if you've ordered already. I'd be curious to see how many of you have already done so. And one thing that we can do that's pretty cool here on Riverside is I can go ahead and show this. So this is actually a link that you can click, and this will bring you right to the order page where you can access the Trader's Handbook. We've got a lot of bonuses in store for you, and let me bring up that link one more time. We've got a lot of bonuses in store if you do pre-order. We'll be announcing special model books that you get access to, so definitely go ahead and pick up your copy if you haven't already. All right, perfect. So let's dive in a little bit today. Oh, actually, first, I do want to mention that in addition to pre-ordering the book, you also definitely want to join the handbook waitlist. And if you're joining this webinar, you've already done so because you get access to a lot of bonus articles and resources as well. I've already sent out and created quite a bit here. But, to get access to the last ones, including next week or the week after that, I'll be sending out a trade analytics log, a lot of templates, checklists, educational articles. To unlock all these bonuses, you want to join this waitlist. And you can access that through this QR code if you're watching the recording and haven't yet joined. And the link will also be in the description of the video recording. So with all that out of the way, go ahead, Ray. Do you have something to add?
No.
Okay, cool. Perfect. So with all that said, just want to welcome everybody once again to the next Trader's Handbook educational webinar. Today we're discussing stock selection and routines, how to narrow your focus, how to find the top market leaders. This is very relevant and time relevant to the current markets, and this goes along with Chapter 9 of the Trader's Handbook. So if you're following along with that resource, this is the great webinar to complement that. I want to start out with a classic quote from James Clear, the author of Atomic Habits, that's very applicable to today's webinar. Basically, the quote is, "You do not rise to the level of your goals, you fall to the level of your systems." And I think with trading, of course, our goal is to perform, our goal is to be in the top market leaders, but how do we actually go ahead and achieve that goal of getting into the PLTR of the day, of getting into the Tesla of the day, of getting into an NVIDIA, early 2023, 2024. How do we actually achieve what we want? We have systems in place, screening routines in place, the logistics in place to identify and enter those names. And that's what screening and routines is all about. So it might not be the sexy part of trading like edges and setups that we previously covered, but it's actually one of the most important concepts that allows you to execute your trading plan and actually perform at the end of the day. So I think there's a good quote to remind you that it's about the structure that we build with the routines and screening routines that sets us up for success later on with trading. Here's a little bit of the agenda today. First, we'll discuss stock selection, the TIGERS framework, Tigers framework. Then we'll discuss screening, building a screen from scratch. What are the steps to do that? We'll share a lot of screens that we personally use as well during our daily and weekly routines. Then we'll discuss daily routines, weekly routines, how we actually go about that, and get into a lot of the details as well. We're not just going to be talking high level stuff. We're going to talk about really the nitty and gritty about what we do, how we sort by columns to identify top movers in the first 5 minutes. We're going to be getting into all of that. So stick with us until the end. There's a lot of great stuff that we'll be covering. All right. So first, getting into stock selection. This is the first bucket of today's session. To start with, what is stock selection? It's all about how to find and focus on the top trading opportunities each market cycle. Again, how do you get into the PLTR, the NVIDIA, the Tesla, those top names that everybody wants to own and goes up hundreds of percent? How do you actually find and identify those before they actually make those moves or at the start of it so you're along for the ride? Well, basically what you want to do is define the characteristics of the top performing stocks and design screens and routines to find stocks that match those closely. Basically, you need a system to find the highest potential stocks that meet your process and criteria. And for growth stock market leaders, the stocks that meet the Tigers framework are exactly what you're looking for. And this is inspired by our chats with Stan Weinstein. Whenever there's a big gap up in the market, which is, we like to trade the gapper setup. It's a sign of high potential in a stock. He says there's a tiger in the tank. And this is actually where that phrase come from. This is an old commercial for, I think, gasoline as well, talking about how to supercharge your car by putting in their brand of gasoline. Well, if you want to supercharge your trading, you want to use the Tigers framework, and we'll walk through the exact criteria that we look for that define this. So this is the Tigers framework. It's an adaptation and our kind of evolution on the CanSlim framework that tailors it a little bit more towards current market environments. So what does each of the letters stand for? The T in Tigers is the theme. The stock is riding a strong growth theme. The strongest themes of the day. What is driving the market higher? Recently there's been a lot of AI software names. Those are themes, examples of themes. Second, innovation. The company has a standout product, service, or element that separates it from its peers and makes it stand out. This could be a game-changing process, product, service. A CEO could also be a standout. This is basically the N factor in CanSlim. The next element, the G, stands for growth. The company is currently growing its earnings and sales rapidly, or is projected to in upcoming quarters. Quarterly triple-digit growth year over year and acceleration are preferred. We'll show examples of that later on. But basically, we're looking for stocks that are growing the fastest, especially in terms of revenue, and maybe they don't quite have the profits just yet. And this is kind of an evolution from CanSlim, but they're on the brink of that. They're on the brink of being profitable. There's hints of profitability. Their revenue growth is there because currently in modern markets, some companies just don't focus on profitability. They're focusing on building their systems, reach growth in terms of revenue, and then they can just kind of flip that switch later on and turn on profitability when they focus on improving their margins, and actually becoming profitable. And this leads to this turning point is something that we look at closely. Tesla back in 2019, that was when its first quarter hit, where it started its massive run of several 100%, if not 1,000% over the next few years. And most recently, PLTR also made that flip, and that's what drove this 1,000% move that we've seen so far. So this growth is really key, both in terms of revenue growth as well as, of course, earnings growth, or at least a hint of earnings growth. And the higher the better. We're looking for the superior stocks. We're not looking for your run-of-the-mill growing 20%. We're looking for 50% growth, 40% growth, 60% growth, and ideally triple-digit growth as well. Then edges. We talked about this at length. It's covered in chapter 3 of the handbook, and we also did the whole webinar on edges and setups. Basically, we're looking for edges to be present in the stocks that we select, whether that's relative strength, whether that's the N factor edge that we talked about. We want to have, again, we're looking for exceptional companies that are showing these edges. We don't want to focus on mediocre companies. We want to focus on exceptional companies. Then relative strength. This is one of the edges that you can look for, but it's also so important that it deserves a letter of its own. We're looking for stocks that are displaying unusual strength, outperformance, momentum, and strong trend, and the ability to trend. And last but not least, the setup. All of this is all well and good, but if the stock isn't showing a setup, then it's not actionable at that point of time, so it's not worth considering. So the stock must be forming an actionable setup. So this, in a nutshell, is exactly what we're looking for in terms of stock selection to identify the market leaders. This will help you find the PLTR, NVIDIA, CrowdStrike, Tesla when they're in favor. This is a great framework to memorize and to screenshot as well. If you want to take notes, this is a great slide to screenshot. Rai, anything you want to add on this high-level framework before we get more into the nitty-gritty of how we actually apply all these different aspects of Tigers?
All these aspects play a role together. So there's no really, your top winners in the market will have the theme, will be innovating in some space, will show growth just because of the fact that they're innovating and creating something new, and they're part of an up and coming theme in the markets as well. So the edge will show the relative strength is going to outperform the markets, and then a setup will form. So it's not one or three of these elements will be present and two of them won't be. It will be all, 6 of these factors will all be present when you're trading the right stock. And, some of them that come to mind, and feel free to put them in the chat, are, NVIDIA's run, PLTR's run, APP, the stock that ran. So they had all of these factors going for them to be one of the standout stocks in the markets. So just make sure that it's not a checklist for 3 out of 6 type of thing, or 2 out of 6. If you're going to have 6 out of 6 if it's a very, very special stock.
Yep, perfect. All right, so getting more into each of these aspects, first focusing on the theme. Each market cycle is shaped by dominant themes, often driven by the macro environment or the innovations of the day. And you can kind of, and this is something we learned from Oliver Kell, something he's kind of conceptualized. There's kind of 2 main different types of themes. There's transformative themes and cyclical themes. Transformative are game-changing innovation, new technology being developed. This could be AI, this could be the internet, this could be semiconductors. By themselves, they're almost a platform that creates different themes around the market, and they can last years and years, even decades. We're still seeing the impact of internet, and really AI is just a continuation of that technology, as well as, of course, it being built on semiconductors. So these are long-term, innovation-driven, and this is more what we want to focus on to catch those transformational companies and transformational trades. The second kind of theme is cyclical. This could be energy, banks. It's more short term. It's macro driven, driven by, what the Fed's doing, what monetary policy is like. This can work. There can be good trades that are created by this. Gold could be a theme as well, as we've seen recently with the miners. But it's not going to quite produce those amazing market leaders. There could be good trades here and there, but really we want to be focused much more on the transformative themes up here. So getting more into the theme, leading companies within these themes will grow rapidly, attracting institutional demand and driving powerful price moves. And this is because, institutions and ETFs, they have mandates that they need to be exposed to a certain sector or a certain leading name. And when new transformative themes come into play, there's going to be, just an injection of money from these institutions into those new themes and into the best stocks within those themes. And exceptional stock opportunities arise when three forces align. This is key. So make sure to write this down. A strong market, a thriving theme, and a standout company within that theme that has the best product, has the best service. So I'll say this again. Exceptional stock opportunities arise when three forces align. A strong market, a thriving theme, and a standout company within that theme. The goal is to identify the top 1 to 3 stocks in the leading transformative theme by tracking momentum, RS, and of course, clean setup. So, Ryan, anything you want to add on the theme or kind of how you think about identifying the themes as well? We'll touch a little bit on that in the routine section, but anything on theme that you want to add here?
I would say when safety is a theme, that means it's usually not a good thing for the markets, right? So if, for example, there's utilities and REITs and high dividend stocks like Coke and Pepsi trending, tobacco, etc. That's usually when that is a theme, it's a safety type of market where you have to. It's not driven towards growth stocks. It's not driven towards innovation. Valuations are usually too high, and we've been in that euphoria zone that we spoke about in the last webinar, right? So when valuations come down, they're back, down to earth. We're consolidating. Growth stocks are building, bases. Those are the times, that's information as well. So that should not be ignored. It should be taken as feedback that, hey, right now, the biggest companies in the world that are innovating, trying to do something new, trying to be that, the next step in what we may see in terms of AI, semiconductors, internet, software, etc. That is not, the market's not kind of open to that kind of conversation at the moment. So do take both sides of that equation as information. When, growth is working, your accounts will grow 2 to 3 times. When safety is working, it's best to usually be in cash. Yes, it's good to trade gold miners. Yes, it's good to trade oil stocks. But what happens is over time, you're just going to tire yourself out. And the best moves in the market over the last, 50, 60 years, however much research that you want to do, is in the transformative space, right? When there's something new, something drastic that's happened, etc. The last thing I want to mention is there are times when old companies can also be transformative. That's a mistake I've made myself. So when I look at the chart of Microsoft, hey, it's Microsoft, what can it do? Well, Microsoft's stock's been up 150% in the last 24 months, right? So why did that happen? They focused on cloud infrastructure, they focused on AI, they invested in ChatGPT, right? OpenAI itself at a very early level. And then when those things come about, that company transformed itself to be something new, even though it's been here for, forever. Right. So that's something that, I'm quite weak at, and I tend to label stocks, and I know, many of us do as well. GEV, someone said in the chat as well. So don't just, I would say, label companies. It's important to know why the stock is going up, what's happening. And usually the older companies, when they're really going up, they're doing something to keep up with the times, or they're leading the times like Microsoft is in a way at the moment, given that OpenAI is a private company. So that's what I wanted to add.
Getting into the next aspect of Tiger's innovation. So theme leaders often have a unique value proposition, such as proprietary technology or a novel solution to a critical customer problem. This is what allows them to grow so rapidly. When identifying a theme, research which companies are truly innovating by reading credible articles and listening to informed podcasts, while avoiding kind of hype and sensationalism. That's going to be a part of every theme. There's always going to be saying AI is going to solve everything in 5 months, right? You want to kind of not be too far out on the exceptional end. You want to identify a strong theme and kind of meet it in the middle between pessimism and optimism. Be just kind of try to be as objective as possible. Keep your ear out, read different articles, but you don't want to get too invested either way. And, we always want to manage risk at the end of the day, right? Be skeptical of grand claims. Instead, focus on consensus among credible sources to gauge what's real versus marketing fluff. In many CEO presentations, they've talked about how they're investing billions into AI. When you see the Meta CEO, the Nvidia CEO, the Facebook CEO, when they all come out and say that, that's something that you can take credibly and incorporate that into your thesis about why AI is going to be a theme that lasts multiple years, right? Also, first-hand experience with the product or company can offer valuable insight about what sets the company apart. Eve Bobach of the IPO Lifecycle Trade Crew, she is excellent at this. With Tesla early on, she went out and tried it and was just, amazed with it. And that helped build her conviction in that particular stock and trade, and she killed that trade. So that type of first-hand experience can be really helpful to identify, what sets a company apart. Is this going to have a lasting impact on consumers? So that's something that you can incorporate as well into your process. If you can go out and try the company, go ahead and do so. A compelling theme or technology doesn't matter if the market doesn't care. This is really important to remember. Watch how institutions respond. Watch price action. Even if you think a stock is going to be a game changer because everybody's promising these amazing growth in market share or growth in the market as a whole, if the price action does not support that thesis, you have to wait and maybe come back when it starts, showing relative strength, developing a setup, all of that. So price action must validate your thesis. If it doesn't, don't force it. Move on and revisit later if conditions change. Ryan, anything you want to add here on, something that you might see in a company that sets it apart in terms of the product, the service? We're price action traders at the end of the day, but, anything that you want to add here as well.
Yeah, I would say, many traders tend to go all in on something, and that's great when it works out. And when it doesn't, it can be your end all, and it will finish your trading career in overnight. So even if you feel like the best approach that you want to take is to place all your chips in one basket and watch that closely, they're very special and few people that can say and do that in the markets. So be very careful of that. I like what Richard said in terms of, every trend or any theme in the markets that's led by anything is as good as what price is doing. So if the price is not moving up and you have a skincare brand that is claiming this and that is going to happen in 5 and 10 years, and you're banking on that to happen and it doesn't, and you place, a large percentage of your portfolio into that type of into those type of companies, you're going to have a hard time staying just active in the markets, because it's almost like a coin flip or buying a lottery ticket at that point. So consensus, looking at it, making judgment, but also, not having all of your money in one kind of space or one type of innovation is important as well. Again, like we said in previous webinars, in terms of risk management, position sizing, etc., all those things will play a role. Doesn't matter how innovative something is, and for a fact that it's going to be the next big thing, you still want to position size and manage your risk properly and hedge your bets by position sizing well and not all in one name. So,
perfect. All right, getting into the next aspect, growth. We like to prioritize strong earnings and revenue growth, especially revenue growth, which signals aggressive market expansion. Profits can be deferred through high growth phases, but there should be a clear path to profitability, especially important in tighter monetary environments. You might remember in 2022, it was really the stocks that were unprofitable or didn't quite have that robust earnings growth that suffered the most and dropped 85%. So there's situations, there's market environments where profitability is preferred, and you just want to keep an eye out and see when the situations are. So overall, we're looking for significant year-over-year growth of at least 25% in earnings or sales, and the higher the better. Triple-digit growth is ideal. And in addition to just really strong growth, ideally what we're seeing is accelerating growth, such as EPS growing from 25% to 40% the next quarter to 80% in consecutive quarters. When you see that growth, and we highlight this in DFU, and I'll show you exactly how in just a minute, When you see that acceleration, that's showing a rapid expansion and improvement in the company, and you really want to look out for that. And let me go ahead and zoom in here to this NVIDIA example. So back in when NVIDIA was forming this base, and we all know what happened, it broke out and gained 80% in a short amount of time. If we look at the earnings growth, it went from negative to positive while accelerating every quarter. So it's going from minus 72% to minus 51%, an improvement, to plus 25%, to plus 861%, to plus over 1,000% growth. This is an accelerating trend in earnings. And when you see this in DeepView, and we highlight this with the blue bar when there is that pattern, that's something to really key in on if the stock is recently accelerating its earnings growth. And we also highlight that in revenue growth, which showed up a few quarters later. So this is a key thing to look out for because it can create the market leader moves that we're exactly looking for in the market. Moving on, well, actually, Ryan, anything you want to add on growth, what you look for in terms of revenue growth, earnings growth, anything like that?
One of the other things you will see with new spaces, new themes, new stocks is the rise in daily average volume that would accompany the growth of the company. That's just an element of more market participants being interested. So if there's a name that is trading 150K to 200K average daily volume on a 50 or 20-day basis, and all of a sudden that jumps to 400K to 500K, it doubles. That means there's more interest in accumulating that name. Now we don't know the direction, right? The direction is always determined by price, but looking at that rise in average daily volume when it comes to innovation themes or new themes in the market and looking at growth, you'll see that in every single stock, be it the Google, NVIDIA's, Chipotle, Costco, MELI, Amazon of Brazil, etc. They all showed that same thing where when there was an increase in interest, especially from the institutional side, there is a rise in daily average volume. This I'm speaking to for new themes that come up in the market in the future.
Yep. Perfect. And that goes along with edges. That's exactly an edge that we look for, the increase in average volume. And we did an entire webinar, there's an entire chapter in the book dedicated to this. So we're not going to go into in depth, but just in general, fundamentals must be confirmed by technical action. Signs of institutional accumulation must show up in the chart. Traits of leading stocks include the ability to trend cleanly in strong markets, quick rebounds after corrections, gap ups on earnings, increasing average volume, breakouts and trending moves from base patterns. So we want to avoid bomb fishing and hoping for reversals, and focus instead on rising leaders already showing strength and institutional interest. Don't guess accumulation, wait for clear signs of technical confirmation. That's really key, and we've seen that recently in leaders like Crowd. They've rebounded the fastest off the lows. They didn't break their 200 SMA when the market was well below their 200 SMA. They reclaimed the short-term moving average fastest. They held up and started transitioning into support that moving average. And then they've gained another 40% since. And we've been talking about this stock throughout this webinar series. And earnings are upcoming, so we'll see if this can continue. And a gap up and go would be a good sign, but we'll see if it needs to consolidate a little bit before it keeps going. All right, relative strength. Of course, we talked about this at length in the Edges webinar, but just to reiterate, relative strength reveals leaders. Stocks that hold up or rise faster than peers during corrections can often become future leaders once the market turns. And a key RS signal includes RS line making new highs, outperforming on 62.5% of down days. This is a specialist screen that Rise developed at DeepView, holding above key moving averages and showing strength during market weakness. All of these are RS signals that you want to keep an eye out for and look for as you're considering a stock as a potential trade or add to your watch list. Institutional accumulation during corrections. Strong RS stocks attract capital during pullbacks as institutions add to high conviction positions and use that market weakness to add to the stocks that they want to continue to build and believe the most in. The RS line is key. This is an indicator that compares a stock's price relative to the market index like the SPY. And an uptrend in the RS line shows outperformance, not just momentum. So we're always looking for stocks that are in RS phases, as we call it, when the relative strength line is above its 21 EMA. And this is what I've got right here. Let me actually zoom in right in this area. So this is the relative strength line here of PLTR, and it began an RS phase on this day right here, well before it broke out through this pivot. So we're always looking for stocks that are in existing RS phases and then pull back to moving averages, form a tight range, gap up, pop up, set up some type of other entry tactic or setup when they're already in an RS phase. That's a key thing to look out for. And just that simple thing, that's a golden nugget that you want to look for. A stock in its RS phase that then sets up constructively early in its trend. That's what you want to look for. And then last but not least, of course, the end of Tigers is the setup. If a stock isn't forming a setup, it's not going to be one that you want to keep on your focus list. Maybe it's on your wider universe list, but it's not actionable. It's not ready if there's no setup. So we're looking for gappers, base breakouts, launch pads. Maybe one of your go-to setups is a moving average pullback, the first moving average pullback. That's fine too. But however you define a setup for yourself, a stock must exhibit that to go on your weekly focus list. Otherwise, you're focusing on a stock in the middle of nowhere with no clear edge, no clear setup, no clear entry tactic, no clear framework that you're using to manage risk at the end of the day. So there must be a clear setup forming. And to focus on a stock, it should be within a few days of completing a setup / triggering an entry tactic. And, it might be difficult, especially for beginners, to kind of judge that of whether it's almost ready to go. But as you gain more experience, go through more market cycles, study more market leaders, study more model books, you'll get a much better sense of when a stock is actionable and ready to go. Ryan, anything you want to add on either relative strength or the setup aspects of Tigers?
No, we've covered each of these in depth in previous webinars and the edges and entry tactics. So if you've missed those, they're on YouTube. We have a playlist on the YouTube channel that you could check out. And if you have any questions, definitely leave them in the comments there. We'll be happy to answer them for sure.
Yeah, perfect. All right. Ryan, do you want to take the slide talking about liquid leaders and performance enhancers?
Yeah, so there's basically two different things in the market that you want to look for. The liquid leaders are the stocks that will lead a trend or a theme that they're innovating the most, and they're kind of the snake of the head type of situation where they'll dictate if that theme, if NVIDIA is going up, then the semis go up. If NVIDIA is going into a base, the rest of the semis will go into a base, right? And usually liquid leaders are highlighted by they trade high dollar volume. They have high average dollar volume as well. And then they have a huge amount of institutional interest. So institutions are looking at that company as the pillar or as the benchmark for how, other semi companies may or may not do well, for example, in the case of NVIDIA. So that's been, in the past, if we take the restaurant themes, the retail themes, the China themes, etc., there's always that one stock that everybody's watching, right? It used to be Baba when it was the China stuff. That if that one's doing well, then the rest of them will do equally as well or rise with the tide. The second is performance enhancers. So what happens is when stocks are moving and a theme is good and a space is seeing innovation, there will be lesser companies in that, lower market caps or mid market cap companies that move a lot faster and will actually, double and triple and then some. So if we take the recent theme that we had in AI, right, we had these companies, like BBAI and others that, kind of had SOUN, right, that were just propping up after the fact, but they moved in terms of percentage moves quite a bit more than your core AI names that were known and leading that trend. So those are what we call performance enhancers. So the way you want to situate your portfolio and how you position size, especially as a swing trader, not so much as a position trader. Position traders want more liquid leaders in their portfolio. Swing traders want a mix of liquid leaders and performance enhancers in their portfolio. So the way I do it is I would take, my core names will be part of the leadership groups like we spoke about in the previous webinars, and then I'll surround the core names with performance boosters or performance enhancers as well. So these are names that are, lower, I would say floats, higher ADRs. They move significantly faster, but I can lower my position size to minimize my risk, but get the equal amount of reward as I would if I were to trade a liquid leader in the markets as well. So those names, they're kind of an in and out type of trade. I'm not looking to hold them 3 to 6 to 8 months. It's a quick move, 30 to 50% in 8 to 10 days. Once you get that, especially when you have a theme going, there'll be many, many, many of those, and you trade out of them so that when the liquid leaders do pull in, or it's time to base for those bigger stocks with higher dollar volume, you have significant cushion that's now built in your equity curve as well. So it's, especially as swing traders, you want to keep that in mind because those things will play hand in hand, with each other for your equity curve to rise. And then especially when those things pull in, the bigger stocks, your Nvidias, Microsofts, etc. When they pull in, you'll have sufficient cushion to kind of see, hey, can I let this base out? Can the a flat base be built and I'll hold through that, or do I need to sell out because my equity curve is going to be hurt? So I think there's more on this later on as well, or in future webinars on performance boosters or performance enhancers.
Yeah, and what I want to add, I love what you said there, and just kind of want to reiterate everything there. When I think about my portfolio, I have kind of 5 slots open, and I want to have 3 of those 5 slots be liquid leaders, a Crowd, a PLTR, a Tesla right now, for instance. And then I've kind of got those 2 other slots to work with and identify performance enhancers, more swing trade type names, higher momentum names to take advantage of those opportunities. But I think a mistake that people early on make when they haven't mastered risk management, they're pretty new to trading, they're stage 1, stage 2, is they see everybody posting about the performance enhancers on Twitter, the Oklos, the IONQs, the really fast ones, and they think that's what you should be trading. That's what all your portfolio should be in. What that's going to do if you focus majority on that is the volatility in your portfolio is going to be higher. You're more likely to get stopped out if you're not adept at entering at proper points and managing risk and selling into strength, all of that. And it's just going to create a lot of frustration. And, when we talk about boom and busting, those big swings up and down, it's going to exacerbate that problem if you're only focusing on those super fast movers. So I think if you're newer, stage 1 and 2, focusing almost entirely on liquid leaders, or maybe having one performance enhancer slot is probably the way to go. But focusing on liquid leaders earlier, which still can make amazing moves. I mean, PLTR is like halfway between a performance enhancer and liquid leader almost. It's definitely liquid, but it can make really fast moves. Focusing more on these early on is probably the way to go. And then when you've got a few market cycles under your belt, then you can experiment with seeing, do I want to take advantage of an Oklo when that theme is in favor, an SOUN when AI stocks are rocking? That might be something to think about and define for yourself. But I think, focusing on liquid leaders more as the core of your portfolio is probably the way to go for most people, especially starting out. So just wanted to add that. All right. So getting now into the routines and the screening, that was kind of the high level framework about how we think about stock selection and, structuring our portfolio. Now, how do we actually find those stocks and build focus lists and all that? How do we actually apply those frameworks? So first, another quote here. Ryan, I think you added this one. You'll never change your life until you change something you do daily. The secret of your success is found in your routine. I think this is repeated over and over again in performance-based fields is, you can't change your outputs without changing your inputs. And, again, it's about establishing the structure, the routines, the processes that allow you to identify a PLTR, CrowdStrike, Tesla, NVIDIA, going back these great market leaders from the past few years. Earlier in the cycles, how do you find them and identify them early so you can take advantage of those trends by having routines, by having screens that on a daily basis will show stocks that fit those templates. So that's what we'll be talking about today. Right, anything you want to add on this quote or how you kind of conceptualize it?
No, I think this is what we'll cover in this section. It's the most important aspect to get more consistent in the markets, to have certain steps that you follow. It will boost your confidence as well if you don't have one written out, or if when you skip, your routines due to things outside of trading, you'll know that is not a good time for you to trade as well. So a lot of traders feel like when it's Monday to Friday, they have to kind of place a trade. That's not always the case. If you haven't done your routine, you could always take a week off, come back later. And when you do, you'll have high confidence in your trades, and confidence plays a big role when if certain position or something is pulling back as well, you'll know that you've done your homework, and you'll have more, a little more emotional, confidence as well as you go through and navigate the markets.
Yeah, I love what you said there. And just to give an analogy, if you're a pro baseball player and preparing for the next day's game, are you going to be more confident having studied the pitcher, what he throws, when he throws it, done a bunch of reps in the batting cages, visualized anything that can happen that next day with that starter throwing at you. That is the homework that you have to do to prepare as a professional baseball player. What we're going to be talking now is the homework you have to do to approach trading like a professional and to prepare yourself. And like I said, confidence makes a huge difference in trading and any performance endeavor. And doing my routine on a daily basis lets me know that I'm watching the right stocks. I'm focused on the best opportunities. Doing that work guarantees me that I'm prepared to trade and manage risk. So that's super important. So I like that you said that, Rye. So yeah, why is a trading routine important? Most importantly, a regular routine is what keeps us highly in tune with the market and the process of rotation among its leadership. And you want to skate where the puck is going. People always say, how do you analyze rotation? It's about doing a routine every day and noticing subtle shifts in multiple stocks breaking out of a same group, noticing inflows into an ETF outperforming on a down day. Those are the subtle clues that you'll only pick up on if you do a routine every single day. So routines almost forces us to keep the market story in our head. This is what Ross says. So you're continually aware of what the major indexes are doing, as well as how the process of rotation is unfolding. It forces you to be aware of the portfolio progress or lack thereof. Be really realistic with yourself. What kind of traction are you getting, or are you pulling back? Are you in a drawdown? It really focuses you to be aware of that and know the steps to take to correct that if need be. All long-term successful traders that I know have an established routine. Every single person who I've interviewed on the Traderline podcast or at the Traderline conferences, people who have been doing this for 20 years successfully, they all have routines that they follow to identify the top stocks for their system, for their process. Also, a routine hones your skill in the art of trading, pattern recognition, always knowing what's leading and where we are in the cycle, which are all critical to your success as a trader or investor. I think it was William O'Neill who said that 50% of the people involved in the market, or maybe it was 70% of the people that involved in the market, simply haven't done enough homework. This is the homework that you need to do to be successful over many market cycles over decades, right? For part-time traders, it's equally important to have some sort of regular routine for all of the reasons discussed above. So just because you're doing this while you're also, of course, have a full-time career, that doesn't give you the excuse to not prepare adequately. You can't just jump into the arena and expect to perform if you don't do the work. So do the work, do your training routine. Ryan, anything you want to add here to this concept?
No, I think as part-time traders, you will have even more of an advantage because you're not distracted. You don't, you have a very finite amount of time, and having that structure will also help you in terms of your daily and weekend routines, right? And it's actually beneficial that stage 1 and 2 traders are part-time, so that it gives you that focus and you know what you have to accomplish. It's an important part of the framework that we're discussing throughout these webinars, and I think this is what webinar 7-ish. So all these things play an equal role, and what you can't pick and choose what you want to do if you want to be successful. So what we've tried to do in the book that we've written, the webinars that we're doing, is trying to just talk about this, the most important points, and the trading routine is one of those points as well.
Yep. All right. So what is a trading routine? Before we get into the details, it's a consistent series of steps or tasks, screens you run, things you review, designed to manage your portfolio, find new ideas, and prepare for any actions you might take. As humans, we're always best at things we do over and over again. If you've tried anything, you're going to be terrible at it when you begin it, unless you have some natural gift for it. But as you improve, you'll be astounded about how much progress you can make in a month, 3 months, a year. If you do something consistently, you'll just improve and find 1% improvements every single time you do it, and that's the goal here. So it's the repetition of something that what seems to be a daily task into a habit. It's no different in trading and investing. Having a daily and weekly routine that you consistently follow will build good habits, and more importantly, positively impact your trading in a big way and your performance. So I think this is probably a common question people have. How long should a routine take? I think there's not a clear answer here. I would say my daily routine and weekly routine, which is just a little bit more, probably take about 45 minutes on a daily basis, and then maybe an hour on the weekends. But it's going to be tailored to your style, what you like to review. Some people might get it done in 15 minutes. Other people, 30, other people an hour. If you're more a beginner at this, I would say, it's going to take a little bit longer, but again, you'll just become more efficient at it. You'll be able to run through charts faster, run through your screens faster, and you'll just get better and better at it over time. So Ryan, anything you want to add about how long a training routine take, and maybe give some input about how long yours typically takes?
Yeah, your daily will always should be a lot smaller in terms of what you're looking at. You don't want to spend multiple hours. I think part of performance is also having a good routine outside of your trading and getting enough sleep, stepping away, spending time with family, so that when you're trading the next day or you're coming to your desk at 7:30, 9:30, whatever the case may be, that to make the right decisions, you need a fresh mind. And a lot of traders don't seem to initially, especially in stage 1 and 2, understand that. Just like athletes kind of take a rest day on their off days, they're not they're training lightly, not they're not going crazy. It's similar in trading as well. If you kind of sit there at your desk all day, you're spending multiple hours before the market opens doing this and that, it will affect your decision making, because that's the most important part and what dictates when the information is real time, you're looking at things in a real time manner. How do you decipher that information? And for that you need a fresh mind. So daily routines, 1 to 2 hours. Sometimes if it's a bigger down day in the markets and you're holding significant positions, or if you're getting caught in a gap down, obviously those days will take, I do a lot more work on those days. And then if it's the last 9 days have been up days in the S&P, so there's not much to do there. Just sit there and look at what you own and take measure of that. So it's variable, but it shouldn't be 5-6 hours daily. That's way too much in terms of position and swing trading. In terms of the weekend routine, I take a look at the markets in a more holistic way. So I'm reviewing a lot more charts, closer to 2,000, 3,000, 4,000 charts. Some people call that crazy, but if you're doing this full time, it's the only thing that you're doing, then it makes it worth the effort, so that you're prepared for the week ahead. So each situation's personal, I would say. It depends on your lifestyle, what you're doing, how much trading contributes to your income. But it should be shouldn't be crazy on a daily basis, but the weekends do spend some time, because it is rewarding. And that seat time, when you're going through different stocks, when you're doing that consistently on a weekend basis, over time that adds up. Just like the trading journal that we spoke about in terms of market cycle and keeping a track of that, it's almost like a mental thing where when you do a routine and you look at a stock, let's say you analyze this Saturday and next Saturday you get to look at the same one, your brain has a way of working and looking at patterns in a certain way where you connect those two situations, so that the next time you see something like that, you'll respond a lot better. I think the weekends are also about just looking at both sides of the equation, your wins, losses, but also what you've missed and why you missed it, and also improving your process as well. So that's why the weekends I do take a lot more time and kind of split it through Friday, Saturday.
Yeah, so that leads in perfectly here. What are the components of a trading routine? What can be some kind of check boxes that you can think about? First comes market analysis, then portfolio and post analysis, like you just talked about. How are you performing? How are your trades the past week? Then it comes to screening, building a focus list, which we'll have a few slides dedicated to this, because I think there's a big question people have. How do you go from 400 stocks that you look at to a weekly focus list to a daily focus list of just a handful to focus on, right? That's definitely a big question, and we'll answer that. Watch list management, and then creating a game plan after all this work here about going into the next week. How are you going to perform if things turn out this way? What about if this happens? That's all different components that you want to think about here. So, Rye, this is actually a graphic you made a while back about your weekend routine and in kind of a flow chart here. You talked about going through thousands of charts. It's because you go through all these different ETFs and all the stocks that are traded on those ETFs. But you want to walk through this and kind of talk through, maybe the most important things that people should take away from this flow overall.
Yeah, so my routine's broken down into basically three components. One is a lot of scanning and looking at charts. The second is looking at my existing positions and how those are performing. And then the third is, I subscribe to different reports, Beatstand, the TML Talk, etc. That's the third component. So the first one basically tells me it's a personal scan, different scan. So I'm reviewing components of the IBD 50. I'm looking at the S&P 500 and all the components there, how they're performing. So that's 500 right there. NASDAQ, it's 100 stocks, and Russell is over or closer to 1,800, 1,900 stocks there. These, just going through the components of these major markets and also the IBD 50 list, which from a growth perspective tells me what's happening, gives me a good idea of what is working, what isn't working, what themes are working. Is safety a theme? Is gold, are gold miners a theme, etc. Things of that nature. Second is customized scans. So it could be tactical based on the situation. So if we had an inside week, I want to see what wasn't inside in terms of relative strength. If we had an outside week where the market was breaking the prior week's low, then you want to see what didn't break the prior week's low, etc. So tactical screening in terms of relative strength, bases, and what's forming there. And we all have different ones. So the main ones for me are the Gapper, IPO, and HDF. I make sure that those watch lists of mine are always updated. The second thing that I'm doing basically is going through each of my positions, right? How are they performing? Do I need to look at, the rising 21 day as now a stop for them? Do I switch from the daily to weekly in terms of managing the positions? And what, is out of, let's say I have 3 or 4 positions, which one is my weakest and requires most of my attention? So that's what I'm doing when I'm reviewing positions. The last one is to gather insights from others. So Ross has over 25 years, 30 years of experience. Stan has a closer to 50. And what are those guys and how are they looking at the markets as well? So I tend to read those reports as, just additional insight to learn what they're doing, because they obviously, if you're in the game for 25, 30 to 50 years, you've done something right to survive that long and be that successful. So that is, kind of the third thing that I review as well. So the next step to each of these after you scan is to update the watch list. So I have core watch list, the Gappers, IPO, HTF, leadership. Leadership is one that I keep intentionally just so that I'm forced to position in these themes. It was one of my weaknesses where I would keep a Gappers, IPO, and HTF list, but I wasn't positioning in the leadership stock or the stocks that were leading a particular market cycle or a theme in the market. So that was the fourth one. And then the universe, which is just a combination of all those lists just to see what's happening there. Next is a focus list. So for me, the focus list has, it used to be 10 is what it says here. Right now it's like 5. And I'm trying to get even lower to 3 to, if I can get 3 to 4 names and size them well and be in those positions, that's been, a recent focus of mine, not 10. And then just looking at, which ones deserve the most position size, which ones deserve most of my money, so number of edges that they're showing, which theme they're in, etc. And then if I have 3 or 4 stocks, I know exactly which one should get the most amount of position sizing. So all of this work that we spoke about just now is done on the weekends, and then on the weekdays, it's just the market opens. Do those levels trigger? If they do, good. You get the position, you assess the situation, and you make a decision on if you want to make a buy or a sell. So I'm not making any decisions during the weekdays. I'm not gathering information. I'm not looking at the markets and saying, hey, is now this new stock that's popped up a good idea all of a sudden, etc. So that does happen time to time, especially with the Gappers one watch list. But for the most part, I have a really good idea of what the market's doing. I have a really good idea of which names I want to get involved in as well on the weekend. So that's kind of the weekly, the last step to this is just, where am I at? Am I making progress? Am I not making progress? The stat we spoke about with last webinar with Eve, if you're 5% off in terms of your equity curve off the highs, am I really doing justice, or am I making some progress, or does it justify action in the upcoming weeks? So that's market conditions. I have to know clearly what my leadership groups are, so I intentionally write those down That's just a deliberate exercise for me to make sure that I position in those, and then just the state of portfolio and focuses. So um, what I'm trying to get at, I guess, in this slide is that 80% of the work should be done on the weekends as a position or swing trader, and then the daily routine is kind of slowly tweaking that plan depending on what the market is doing from Monday to Friday. A lot of traders do the opposite in stage one and stage two, and that's why you struggle. If you're waking up looking for something to buy, it's almost like going to a mall and looking at different stores and you're like looking to spend money. You're obviously going to end up purchasing something, whereas trading requires the opposite. It's not it can't be random. It can't be kind of you have the itch to buy and you'll just buy it, or you look at someone else and what they're doing and then you buy it based on other facts that are not your own. None of those things will work long term. What will work is the preparation you do on the weekends and then slowly tweak that as you trade Monday to Friday.
Yeah, excellent. So that's just kind of a high level example of kind of the system you want to build for yourself. And yours isn't going to be exactly like Rise. This is something he's created after years and years of doing this, but you can kind of see the major buckets and steps that you want to take to build your routine here. And Rai, here's a little bit more detail. I don't know if you want to add anything here, but this kind of breaks it down by day, how you do your weekend routine. Right. Anything you want to add here?
In terms of the Friday, so for me, it's remained the same. I would say Friday, I try to do a little more now, so that Saturdays are light and Sundays are basically nothing. So I try to get Sundays for me have to be a day off, so that Monday I'm like really pumped to go and ready to trade the markets, and I have a fresh mind as well. I think the most important one out of Friday, Saturday, Sunday here is the Sunday. You need a day to kind of disconnect, go away from the markets, and that helps you more than it hurts you. I think a lot of the folks say the opposite, and they emphasize that you have to do everything, every day you have to do something related to the markets for you to be successful. I found that the opposite is kind of true. It's you need a day off to kind of disconnect, step away, and then come back thereafter.
Yeah, what stood out to me is when we did the masterclass with Stan Weinstein, how much of that was an emphasis on having a healthy lifestyle in general and like getting away from the screens once the work is done. Because like you said, that gets you in the right headspace, that ensures you just have a balanced life as well. We want to have balance overall. We don't live to trade. So I think that's an important thing to remember. All right. So key steps of weekly trade routine, just to sum it up again. 1, market sector group leadership analysis. 2, portfolio trading equity curve analysis. Then you get to your screening, building your focus list, creating your trading plan on top of that. And then step number 6, go enjoy life. So getting a little bit into each of these as well. So as you're designing your own system, just kind of follow these steps as you go. We'll go pretty quick since Rai kind of walked through all of these already. First, market analysis. Are we in an uptrend, downtrend, choppy market? Are we in a corrective phase? Are we in a bear market, bull market, all of that? You can use your market cycle, where we've got the market cycle indicator right here. If we're in a negative market cycle, you can help use that to define your rules. And basically at the end of the day, should you be pressing the gas pedal or tapping the brakes? That's what you want to ask yourself here. Then group sector theme analysis. This is another way to go about it. Rise approach is more bottoms up, looking at the stocks itself. But you can also incorporate top-down approach, which is what this theme tracker is. Basically, this is a list of key themes in the market. This is a built-in feature of DeepView, where we can track all these themes on a daily, weekly, and monthly basis. Your existing themes, and this is a current screenshot, is going to be right here at the top on a 1-month basis. Software, genomics, blockchain, aerospace, technology. Growth stocks are doing well. Semiconductors are rising there as well. And your developing themes, you want to keep track of on a daily basis what themes are standing out. So, just a simple setup like this with the DeepView theme tracker can, in just a quick view, tell you, hey, software is leading. I probably want to be more focused in that area. Blockchain's up there. It's been up there for quite some time. Miners were all the way at the top for, a month. And then we saw software coming up the ranks here on a daily and weekly basis. So tracking these different timeframes and the strength within these different themes is a great way to identify what areas to do more homework in. So this is a top-down approach, looking at what themes are active, and you want to, again, think about what themes are strengthening, what themes are weakening, where's the puck going, is basically what you want to identify. And so this is kind of what I was talking about. Rise approach is very much stocks, sector, market. There's two approaches just in general to identifying the leading themes. There's a top-down approach, market, sector, stocks, or a bottoms-up approach, stock, sector, market. Some people favor one or the other. There's no right or wrong answer. I personally like to incorporate both into my process. I look both at the individual stocks, just like Rye explained, going through the DeepView leaders screen, going through the QQQ, all of that, the components therein. But I also look at the theme tracker to, after I've gone through all this stock work, kind of reemphasize, confirm, give confirmation of my kind of observations were correct. And you might notice shifts a little bit faster, or the more nuanced shifts a little bit faster, stock, sector, market. But if you're working part-time, I think you can do really, really well just focusing on the sectors or using something like the theme tracker to stay on top of the themes. So that's really key here. Then leadership analysis, and this is really key, is, you should have a list like Rye maintains of active leaders. What would William O'Neill want to be owning? What would these top traders want to be owning? What are the top 5 names in the market right now? So drop in the chat right now or in the comments right now. What would be the top 5 names that you'd want to build a portfolio of right now? What would be the strongest stocks? Let us know. And then you just want to keep tabs on them. How are they performing? Did they recently break out of a base? Are they trending above moving averages? Or on the flip side, are we later in the cycle and they're breaking down? They're breaking below moving averages. They're gapping down on earnings. Keep tabs on this leadership. As Ross Haber says, watch the leaders, watch the leaders, watch the leaders. That's the most important thing you can do to really stay in tune with the market. And if we're on a risk on or risk off environment. So that's definitely something important to remember. Step 2, portfolio trade equity curve analysis. This is just analyzing your performance. Are you making progress? Rank and grade your positions, which is your strongest, which is your weakest. Know which ones you'd cut first on weakness, and just be honest with yourself about how you're performing. And if you're not performing up to the standards or how you think you should be performing, what inputs do you need to change to get to that level? Or is it more of an aspect of the market in general, which you would see based on your market analysis, leadership analysis, and then you want to kind of decide how you want to move forward. You want to tap the brakes a little bit. But this is really important. You have to look at your actual results, because at the end of the day, this is the ultimate measuring stick that you want to pay attention to. Then post-analysis, looking at your positions, grade and check them, grade your process. Did you enter correctly based on your entry tactic, your setup, or did you enter out of nowhere? Look at your past feedback. Are your trades giving you lower, loss, win, win, or are they, win, win, loss, loss, loss? Look at, the pattern of your recent trades and how they're performing, and you'll start to see patterns and know when your performance is going well, your trading is going well, or when you might want to take a step back because you're getting negative feedback from the market. And in addition to your own performance, this is something that's helpful for me. I also look at my watch list as a whole to see, did the setups that I identified act well and actually break out, or did they all reverse down from pivots and are testing support now? That feedback from the watch list can also aid you in identifying the market conditions and basically just where we're at. So in addition to your own trading, look at how the setups on your watch list performed. All right, step 3, screening. Again, this is just continued market analysis, situational awareness, and theme identification, as well as, of course, trade ideation. So those are kind of the 2 objectives of screening. If you want to take a step back, to find new potential trades and get that bottoms up awareness of the themes and the health of the market. There are kind of 2 main types of screens that you want to think about as you're creating them or using them in general. There are generalist screens and then specialist screens. General screens are using minimum criteria, dollar volume, trend, relative strength to cast a wide net and see a lot of stocks that might meet your criteria. And your criteria might incorporate fundamentals, it might only incorporate technicals, whatever works for you. And this allows you, again, to get a sense of the market, see how groups are developing, and again, just cast a wide net. So you want to think of a net for general screens. Then on the flip side, you've got your specialist screens, which have very strict criteria. Maybe they're only looking for one specific edge or one specific setup or one specific entry tactic. It's a focused search, and it might be situation dependent. Earlier in market cycle, you might only want to be looking for gap ups. Later in a market cycle, you might only want to be looking for 21 EMA pullbacks. It can be situation dependent, and the key thing here is really it's a scalpel. It's not casting a wide net. It's a scalpel looking at a very narrow set of criteria and trying to find stocks that exactly meet that criteria. And we'll show some examples for both of these. But as you're designing a new screen, as well as just using something that somebody else created, think about, is this a general screen for, just seeing general strong growth stocks? Or is it a specialist screen looking for a very specific setup or situation? So here's a fantastic general screen, the DeepView Universe. We've also got the DeepView Leader screen. It's got it looking for minimum liquidity, RS industry group, trend, emphasis on recent performance. Here's the criteria right here. This is a preset in DeepView, and this is going to cast a wide net and get about 200 results that you can go through, pretty high quality ideas. And this is a good way to get a sense of the market environment. And if you can only look at one screen, this is what I would use as well. Another example is the Liquid Leaders preset that we have in DeepView. This is the criteria right here: dollar volume of over 100 million, and then minimum relative strength, looking at for high liquidity and strong momentum ratings. Again, casts a pretty wide net, over 100 results here. We've also got Christian Kouamagi's 3-month top performer screen built in here. We worked with him to bring this as a preset, and we've got minimum liquidity, stocks that move, and looking for top 2% of performers over the past 3 months. And it's a very simple screen, gets about 85 results, and this is going to help you find those momentum leaders, those potential performance enhancers. Here's one more general screen that we've got a preset in DeepView, Mark Minervini's trend templates that meet his trend criteria, off lows above 200-day in trend, and we've got the different variations as well. So all of these are examples of casting a pretty wide net with general screens. Then with specialist screens, we talked about the HV edges and the edges and setup webinar. This screen is specifically looking for stocks that are showing the highest volume ever, highest volume in 1 year, or highest volume since the IPO. It's very focused on that specific edge, and is very tailored to how Rye and people who trade this edge incorporate things. Rye, anything you want to add on the HV edges screen, where you incorporate it into your process?
Yeah, this one I run daily, because it shows up. It's looking at the daily chart itself. So especially in earnings season, it's a good one to run to see which stocks are gapping up and exhibiting this edge. If you're not familiar with any of these or what we're speaking about, definitely check out the previous webinars where we go into depth of each one of these. But this is the one that I run on a daily basis.
Yep. And here's another specialist screen that I use. I call it the Power 21. This is a preset in DeepView. It's specifically looking for powerful stocks that are then pulling back to their 21 EMA. They're within a few percent of their 21 EMA. And ADR over 3%, and within a few percentage of that 21 EMA. So this is built into DeepView, very easy to pick up. And again, a specialist screen that's only looking for stocks pulling back to 21 EMA, and there's not many results here, as you can see. Another specialist screen, triple digit growth. This is what I call the Livongo finder, because that was an amazing stock and it had amazing growth metrics before and during its move. So it's looking for triple digit earnings growth or triple digit sales growth here for this specialist screen. And there's not many stocks that meet that pretty strict criteria. Again, you want to kind of combine all these different screens, both general screens and specialist screens, to create your overall universe. And you can actually use a DeepView combo list to combine everything in one screen. So you don't have to look at PLTR, which shows up on all these different screens over and over again. You can save time by combining all of that into a combo list and then go through the results. And when you want to build your universe list, which is kind of your wider list that you go to, just from your weekly routines and daily routines, add any trending, strong, developing stocks to that list. And what you want to think about is stocks you could imagine trading in the next month would be ones that you would add here. Maybe it's extended right now, but shown relative strength, and maybe you missed it. Just add it to your wider universe list, and then you can review it each week. And if it does set up a pullback setup or some other setup, then you can trade it then. But if you don't keep it on your radar, you're going to lose it and miss that potential opportunity. So again, building your universe list is all about finding stocks that you could trade within the next month. Then building your weekly focus list. Again, this is a list of 10 to 15 names. Some people are going to have less, some people are going to have more. And this is more for stocks that are actionable this week. So they're a lot more refined than something that might just be actionable over the next month or so. And you want to use the top combination of fundamentals and technicals, depending on how you particular trade. Maybe you only consider technicals, that's fine. Weight those stocks based on their technical action. And basically what this should do is it should align with the edges and entry tactics that you use. They should be stocks in leading themes, and they should be set up on both a weekly chart and daily chart. So there should be a setup. There should be a clear setup that you're using and would use to actually execute this stock. Then, in addition, you want to update your watch list. This is what Rai walked through, updating his leaders list, his universe list, his gappers list, IPO momentum. This is what you should do every single week as well. Then step 5, for any names that are on your weekly focus list, create a trading plan. List the edges that go with each of these stocks. List the setup entry tactic that you would use, the position size, number of shares you would use, the pivot level that you would buy, the likely risk management process that you will use, and any other notes that are related to that stock. And think about it in terms of if this, then this. And do this again for all the stocks on your weekly watch list. Step 5 is just about preparation. So setting alerts, early alerts below the pivot, adjusting stops if you haven't already, and just preparing for the week. And then like Rai said and emphasized and we talked about, step 6 is to take a step back from the screens, go outside, live your real life, go enjoy life. And, everybody should have hobbies. And those are a key part of getting your mind right and being in the right headspace to perform as well. So that's it for the weekly routine. We'll get into the daily routine in just a second, but I want to pause here for any key questions that people have about a weekly routine or stock selection. And here's just a reminder, you can order the Trader's Handbook using this QR code. And let me also bring up the link here as well. For those in here, you can click this and order yours. We're really excited to get this out. It's coming out in just a few weeks now. You definitely want to pre-order to make sure you have it on launch day. And we'll be talking about a lot of the bonuses that you unlock with this as well. Exclusive Q&A, exclusive model books as well. So definitely go ahead and pick up yours. But let's see if there's any questions. And Rai, if you see any that you want us to answer, definitely just call it out and we can get it going.
Yeah, I see a couple coming through from Anthony, Shane. So, do you want to bring those up on the screen or?
Yeah, let me go ahead and do that. Give me 1 second.
Are you bringing them up on the Richard F screen? Because I don't see.
No, I'm trying to find them. There's a lot of chat messages here.
Yeah.
I gotta scroll to the bottom here. All right. Which one did you want to start with?
Any. How do we screen for we patterns or?
So this is from Jas. After tight and logical price action, how do you rank everything else by importance? Volume, earnings, rev, guidance, RS, market strength, market cycle. For me, it's all about what's the tightest and has shown the ability to trend in the past, and I can visualize it doubling from here, right? This is a framework that I think you talked about. Can I visualize the stock doubling from this point, from the setup on both the daily and weekly chart? And from there, I think the theme is the most important thing, and that contributes to the potential of the stock. If it's not part of the leading theme, it's probably not going to be the best performer over the next few months. So that's what I'm always thinking about. Right, anything you want to add to this question, how you rank a stock based on the different characteristics?
Yeah, I think price and the price characteristics, if it's a higher price versus a lower one, right, is an important one. Usually performance boosters are your lower price stocks and your liquid leaders are your higher price. For me, float matters. So float tells me how fast a stock can move. But recently we've seen, other factors like a stock with $1 billion float can still kind of move quite fast. Um, ADR is one. I don't really look at revenue like guidance numbers. That's not really part of my game. But I do look at if the earnings is the highest it's ever been or the sales have been the highest they've ever been. That's a key metric for me. Let's see. And then where we're at with the market cycle. So, like we spoke about in the market cycle webinar, if we're early in the market cycle and I've seen a stock and I'll pick on a particular stock, in this case, in this cycle, it's been Hood and PLTR, and those have been my focus. Did Netflix move up as well? Yes, it did. Did I get into it? No. So I'm not going to catch every one of them, but I usually take a few stocks that I feel like are forming really good bases, and then when they start to show relative strength, I even what I say is I Sharpie them. Sharpie meaning I just write it down with a Sharpie. It stands out on a piece of paper. And then those become even, I really just take that and I want a position size in those. So all these factors kind of play a role. And then I want to get in early in the market cycle there. As the market cycle is turning, and if I get into those stocks, they will run 20 to 30% initially, just based on the ADR flow characteristics, the group they're in, how they've traded before, like Richard said, etc. So,
yep. And then I see a few questions on the bonuses and ordering the book. All you'll have to do to unlock the bonuses is we're setting up a form where you'll submit that, and then we'll know you order the book. So keep your receipts and all of that. And by submitting that form, we'll give you access to all those bonuses, and that'll be, if you get the Kindle version, that'll unlock. If you get the hardcover version, that'll unlock as well. And we'll have much more information on that in the coming weeks. Let's see. There's a good one from Shane here. Let me find it. Are you saying that the daily and weekly charts must align before you take an entry? There should be an overall setup that you're using, and the best setups for that allow a stock to double from them are both on a weekly basis and a daily basis. They're coming from a well formed, developed weekly base, and the daily setup might be, or the daily entry tactic might be before the weekly chart actually triggers. So the pivot might be a little bit lower, but ideally it triggers the daily pivot and then the weekly pivot in that same day or in the same week. That's what I'm looking for. I'm looking for stuff set up on multiple time frames. That's where I found the most success. All right. Let's see. And Ryan, let me know if you see anyone that we should mention. I think this is interesting. Jazz, good questions. If there's a good setup in a strong industry, the stock is not the industry leader, but set up tight and logical, and the industry leader is much higher than the perfect tight and logical entry, do you still pull the trigger, or do you wait for the leader to set up again? I'll answer this first. If I miss the leader, I will trade the second or third name, but I'm always focused on working myself into the leader versus trying to trade those secondary names. So basically my preference is to trade the leader, but I will trade the second stock. And sometimes the first stock to break out in the industry group isn't actually the leader, and sometimes other names take over and there's kind of rotation between them. So I'll trade kind of the first place and second place stock. It would be kind of my answer. Rye, what's kind of it from your viewpoint?
don't miss the leader.
Don't miss the leader.
Just if it's the situation where you don't get the top tier, it is what it is. There's always, when we say a theme, there's multiple stocks in that theme. And then the best part of it is that same theme will have performance boosters as well, right?
Yeah.
So there are multiple ways you can attack a theme and participate in it. Will you get it perfect every time? Likely not. Will you miss the initial run? Likely, yes. And then every time there's a pullback or a consolidation after the initial run where you can get back, get involved or expose your portfolio, or a percentage of your portfolio can be invested in that. So the market's not, there's a theme, it just happens, and there's like a V shape all the way up the right side. That almost never happens in the markets.
Let's see. This is from Manan. Rye, do you check the tape on any day time frame pattern when you enter the stocks? I guess what time frames are you watching when you enter?
I'm looking at daily. My levels are based if I'm looking at like a high volume gapper, EP, something like that. I go to the 15 minute to maybe find the volume support that we spoke about a couple of webinars ago. Um, I know that you use the 65 minute, Richard, quite a bit to find the RMV. But for me, trading's become more about, is it the right stock? Does it have the right ingredients for it to double and then some? And then I try to find a level to trade against. So for me, patterns have become a little less important in terms of, hey, is this a cup? Is this a base? Is this and that? It's more about, is it showing relative strength when the Nasdaq's down 3-4%? Yes. What's the level it's showing? I can pick on the chart that is showing relative strength versus, and then what's my risk versus that level. Go trade. That's it. So that comes with just more seat time and just peeling away extra layers of information. But the most of the research on a stock basis for me is done through, does it have the ingredients? Is it part of a theme? Is it part of a leadership group? Is it innovating? Does it have the one of the edges like relative strength, gap up, highest volume ever, etc. If it has that, then it's just about picking a level on the chart.
And this is we talked about this, but I think it's a good reminder. What watch lists do you build after scanning, and how do you manage them afterward? Moving names between watch lists, ranking the names in the watch list, deleting names, etc. Personally, what I keep is a general universe list, a weekly watch list, and a leadership list. And then I'll set each day a daily focus list, which is my actionable 1 to 4 stocks that I actually want to enter that day. But Ryan, I know you have yours that you ran through already. But anything you want to add to answer that question?
So I have four that I keep: the high volume or the gapper list, the IPO, the HDF, and the leadership. Themes or stocks. Those are the four that I keep, and I keep those in addition to the focus list. The focus list is mostly the names I own or the names I'm interested in purchasing. So those get updated daily, weekly. There's always, as a new IPO comes in and I feel like it has potential, I add it to the IPO list. A new stock that meets the HDF criteria of 100% run in 8 weeks, and then I add it to the HDF list. And then gappers, with the HVE screen that Richard showcased a couple slides ago. So each of those have screening methods. And then the last one is, what are the themes in the markets? I want to track those because I want my portfolio to be part of these themes, because when the market goes up, there's usually a handful of themes that will lead it up on the way up. So that's how I do it.
Yeah, and my universe list is composed of those same things: recent IPOs that have potential, highest momentum movers, recent gap ups. That's what I keep on my universe list. So we're using slightly different processes, and I'm using what works for me. Rye's using what works for him, and you have to decide kind of what works for you. So let's keep going, and we'll get more into the daily focus. But first, I wanted to talk about building a screen. What's a framework that you can use to actually create a screen if you have an idea for either a generalist screen or a specialist screen? And in the book, we actually give a very in-depth example using NVIDIA from the prior 2 years as kind of your model stock. But we'll walk through the framework here as well. So building a screen, there's 6 key steps. First, define the purpose. Be very clear with that. This is something just for anything. Anything you do, define the purpose before you go in to do it. Otherwise, you're going to change your mind halfway through and start doing everything. We're going to talk about this when you're creating new edges as well and doing studies. Define the purpose of the screen. Be very clear about that. Identify model stocks that kind of represent a good avatar for that defined screen. Define characteristics that break down those avatar screens based on fundamentals, based on technicals, whatever is relevant to the purpose of that screen. Create a first iteration, analyze the results, and then update the criteria and just repeat and do this in a cycle until it actually meets what you want. So here is defining the purpose of the screen. You want to ask yourself, let's see here. It's not updating just yet. There we go. So define the purpose. You want to ask yourself this question, what are you designing the screen for? I'm designing a screen that looks for stocks that blank. Is it a general versus specialist screen? If it's going to be general, it's going to be more wider scope, minimum criteria. If it's specialist, it's going to be very specific. When in the market cycle are you looking to find that stock, and how would you define that? And use very specific wording to, again, really think about this. This is probably the stage of creating a screen that you want to think the most about. So you think all these things through before you actually start it. So key questions to ask yourself: do I want to cast a wide net with the screen or yield only a select group of stocks? What type of setup am I looking for? What will be my time frame for trading stocks from the screen? Are you thinking of swing trading these? Are you thinking of position trading screens? What stock / situation / blueprint am I looking for with the screen? Then after you've done that, identify a model stock, brainstorm 5 stocks / situations, which you would want this screen to highlight in real time, and then pick one which best represents what you're looking for. Then you want to define the characteristics, break down that company in terms of metrics, market cap, shares, float, whatever's relevant to that screen or that situation that you're looking for. You can use technical data points. Is that situation happening above the 50 SMA? What is the ADR of the stock that you're looking to find? And then fundamental data points, EPS growth estimates. Again, what is relevant to the purpose of the screen. Here are some helpful data points to use: dollar volume, ADR percentage, DCR. I won't read all of these, but these are ones that you can incorporate really easily into DeepView. I'd add RMV is really helpful for me as well. And these are just some ideas that you can incorporate as you're designing a screen that's fit for growth stock trading. Then you want to create a first iteration. It does not have to be perfect, but you can create starter filters in DeepView and then make any initial tweaks based on what you get in your results. So analyze the results, analyze the charts that show up currently from that screen, and check them versus your model stock. And then think about what criteria needs to be added, removed, tweaked to get closer to only showing stocks that are very similar to your model stock, your model avatar. Then just update the criteria and repeat until you are satisfied with the results. Again, the goal is not to be perfect. The goal is to capture 95% of the stock's blueprint. You don't want to overfit to remove stuff that actually fits the spirit of what you're trying to do. You want to kind of get to 90% perfect, 95% perfect. So the results are useful to you, but you're not eliminating too much as well. And then you can always update to changing markets if that needs to happen. And always update the screen later on if there's something you want to change. Brainstorming ideas. We've got a lot of top trader screens in DeepView built in. These are all presets. We've got well over 100 presets now in DeepView. We've got screens from Amit, Rahir, Ben Bennett, Chris Peruna, Mark Minervini, David Orion, Christian Kwalamagi, Marius Stamatudis. So all these top traders, we've incorporated their screens into DeepView, and you can see their criteria. You can duplicate them, edit the criteria, use this as a foundation for the screen that you're developing. And all these different traders are developing screens for their process, how they approach the markets. And you can use them, again, as foundations to develop your own, or just use them natively as plug and play. You just have to click this drop-down menu, go over to screen of presets, hover over the one you want, click it, and it loads right there and loads the results. So these top trader screens are really good for ideation, but also these are screens that they've developed over years and years, so you can just use them as is as well. We got stuff from Dr. Wish, Mike Webster, a lot of great trade presets right here in DeepView. All right, so now getting into the daily trading routine more so. We talked about the weekly routine. Daily routine is going to be similar, but a little bit more suited to day-to-day. And just in general, a daily routine is essential to perform and stay in tune with daily market action and build consistency in your trading. Everything we're talking about, from going from stage 1 and stage 2 to stage 3, a huge part of that is consistency in inputs and getting better inputs and building structure around those inputs. So a daily routine is critical for that. It keeps you focused, helps you execute, keeps you in tune with the market, identify rotation, and gives you a daily check-in on the market health. So here are some key steps for a trading routine. Rye, I think this first slide is yours if you want to talk about just keeping this efficient overall.
Yeah, I think doing the same steps again and again will allow you to see if a process is effective. A lot of stage 1, stage 2, phase 1, phase 2 traders will switch things up on the fly and not really see the inputs become outputs over a span of time. So if you're continuously changing your inputs, then your outputs will also change, and you will be dazed and confused and not really know what works and what doesn't. And the only way for you to know if something is working consistently is to keep it the same for a span of time, right? And then from there on, tweak and make things better. So the routines that Ross or Stan Weinstein or Mark Minervini, Oliver Kell, and all these guys have, they don't change things every single day, right? They have habits that they have now formed, and it will take a lot of convincing to kind of change those habits over time. But when they are making that tweet, they have sufficient, tweet, uh, they have sufficient evidence, right? They're looking at things from an objective way to get better. So if they have a way to make things more efficient or a way to get in earlier into a name, they will tweak their systems to do so. And Stan Weinstein's a really good example of that, where he switched more to daily charts from weekly because the markets are a lot faster now, right? So his method, he kind of identified, may not be as effective when selling a stock, and he needs to sell a little bit earlier because when things break the 50-day, he needs to get out rather than wait for the 30-week to kind of do its thing, right? So um, overall, I think your process has to be iterative. It has to get better slowly. It won't get to its end state overnight, and it will take multiple years to a decade for you to kind of get to a stage where you have a really excellent, efficient process where every part of what you're doing gives you the really good information at the end of the day. So, yep.
Yeah, and then D, really good question. I just want to highlight this while we're here. What are the key differences in screening criteria for position trading and swing trading? This goes back to building a screen. I think for swing trading, you're looking for faster movers, tighter price action, just higher ADR in general. While position trading, you're looking more for fundamentals to play a factor, the theme to be present, earnings growth, sales growth. Because swing trading, you're looking for fast, quick moves. The fundamentals matter less so in that situation. While for position trading, if you're trying to hold for weeks, months, even a year plus, you're going to need driving fundamentals behind that move. So that's a key difference there. Just more efficient processes from a former TraderLion subscriber. Efficiency is key to maintain a routine, have a visual flow, know the exact steps, professional approach. And again, up to 1 hour so you can build mental capital. Just want to highlight here, this is another example similar to Rise breakdown of how you can organize your daily routine, and you want to incorporate this and build something just like this so you can define for yourself how you actually go about it. So this is just an example. We're not going to run through this, but you can screenshot this and tweak it to your own process. So step 2, after you've done that, reviewing your current positions. Again, for each of your current positions is something I do the night before as well, just very quickly in the morning here. I'm on the West Coast now. I've had to tweak my daily routine from what it was because the market opens at 6:30 a.m. here instead of 9:30 on the East Coast. So I do a lot of my daily routine more the night before versus in the morning. It's about quick checkups here. So quick positions review. Review your current positions, rank from weakest to strongest. This should be done on a weekly basis and daily basis. Set new stop loss levels if need be. Identify key levels. Review your exposure level, your total risk, total open risk, and think about, is it appropriate and in line with the market cycle count and where we are, what you're seeing in your market analysis. And then for each of your positions, plan scenarios. If this gaps down and breaks below 21 EMA, how are you going to respond based on your profit cushion? If we gap up here, are you going to sell into strength or are you going to hold for a longer move? For each of those scenarios, think about how you're going to act for each of your positions and have this planned out ahead of time so you're not trying to make decisions on the fly in the moment. You're just trying to execute what you've already thought through before. And that's going to make execution a whole lot easier. Step 3, building situational and market awareness. So reviewing the market, are we in an uptrend, downtrend, or chop? What is the market cycle count? Review the previous webinar where we talked about this in depth in terms of analyzing the market. is there a stress test potentially incoming? It's funny. Last week we talked about stress tests, and then we got one. So hopefully you guys were able to prepare for that adequately based on what we presented, and that shows you the value of what we're presenting. Are you going to be increasing exposure today, likely based on where we are in the market cycle, or is it more of a risk management day? Are we gapping up, down, plan accordingly? How aggressive do you want to be? Do you want to take new trades, or are you more just taking a step back and managing your positions? This is all something that you should think about and know internally, internalize before the market opens each day. Review key stocks and leaders. Do a quick look at the market leaders. How are key stocks performing in pre-market? Are we gapping up again? Are we gapping down? Is there a common theme among leaders that is software group all acting well? Are semis all getting hit hard based on an earnings report? All of this should kind of go into your situational awareness about how to act. And then also think about how have your last 5 trades performed. Situational awareness, to kind of sum this up, this is an old post from Rye that kind of is a nice summary about how you can organize it. Type of day. Are we in a risk management day, or are we on increasing exposure type day? What's your raw thoughts on the market? What are your raw thoughts overall about how you'll be exposed? So here's some framework that you can use. Where are we in the market cycle? What are your goals for the day? Are there any new key news events today or in pre-market, like CPI? Is it a Fed day? Ryan, I know you hate OPEX weeks, so that's something you consider as well. Are we gapping up, down? Again, is it an aggressive day, a watch day, a risk management day? What could the market do today, and how will you respond? That's something that, again, you should internalize before anything happens. If the Fed speaks and you know it's going to happen at 2 p.m. Or minutes are going to be released, know how you're going to respond for each of your positions if we drop 2% after that or rise 2%. Think all of that through, and that's a part of situational awareness. Ryan, anything you want to add here about kind of what you do on a day-to-day basis to have this situational awareness?
Yeah, I think this can also be part of the market cycle table that we presented. You could just add a column to that and do that on a daily basis so that you have all of this in one place. We will have this in Deep View later this year, where you can journal things from market cycle plus also a situational awareness perspective for your journaling. So
yeah, awesome. And Jay says stress test success. So nice work, guys. Great job applying the concepts here. Step 4, creating a daily focus list. This is probably what a lot of you are here for. How do you actually finalize to the top 1, 2, 3, max 4 names that you're going to focus on a daily basis? For me, this starts the prior evening, reviewing the weekly watch list, the universe list, and my leaders list, and then any environment dependent scans/screens. Again, if a lot of stocks are pulling back in 21 EMA, or that's where the leaders are, I'm going to reviewing that screen. Then, I say 5 to 7 names maximum here. It's more now like 1 to 4. So as you gain experience, you probably minimize this even more. And I'm focusing on the most actionable, highest quality setups/opportunities, the ones with the most edges. So building a daily focus list, some things to ask yourself to help you do this. Of your weekly focus list, what are the existing leaders near proper buy points that you want to work yourself into? Ryan mentioned, in this cycle, we've got Hood, we've got Palantir, we've got Crowd. Those type of names, if they're set up, that should be your daily focus list. Which stocks on your list are part of the strongest theme? That's a key question to ask. Which stocks look most primed for a powerful move today, not in a week? They've got to be set up today for a powerful move. So near key level on a daily and weekly, RMV equals 0 the day before, an upside reversal. Maybe there was a recent catalyst, or it had earnings yesterday and gapped up and potentially is making for a day 2 move. All of these are things that you can incorporate to say, there might be volatility today that I can take advantage of. And volatility isn't negative. It's just a big price movement. And that's what we want on a day that we enter, because it will give us a good cushion if we get on the right side of that volatility. Which stocks show the most recent significant signs of accumulation, strongest RS? Which stocks are earlier in their cycles / have the most potential, can double from this point? Which stocks can you define your risk the easiest? So all of these will help you go from those 15 names on your weekly watch list to, on a daily basis, what you really want to potentially enter that day. Ryan, any color or nuance that you want to add when you're thinking about the 1, 2, 3 stocks maybe that you want to focus on a daily basis?
yeah, I rank them on number of edges that are present how much position size I have to give each of these names. Those are really the two things, and then it's almost a default that they will be part of a strong theme, right? Where we are in the cycle, and then the most important thing is your equity curve. So if we're day 30, day 40 in a market cycle, my position sizing has to account for it, no matter how good a name is, because later in the trend, the market potential reduces and the tendency for stocks to double decreases, right? And that's a reason we want to get involved in day one, two, three of a cycle with the highest amount of exposure so that we can then navigate stress tests, pullbacks, consolidations, etc. thereafter. So that's pretty much, the biggest thing is I need to know how much I'm going to size up a name, and that's always based on how many edges are present.
Perfect. So step 5, building your game plan. So once you have that daily focus list of just a handful of names, and again, by selecting only a small number of names, you're going to execute better. But there's the trade-off that you might miss something. But the counterintuitive thing is you're gonna get more great trades by focusing on less than trying to focus on 10, 15 names at the open. There's just too much noise, too much going on. Focus on less to catch more and perform better. So building your game plan, think about how aggressive you plan to be on that day. For each daily focus list stock, think about what entry tactic you're using. What is your pivot point? What's your buy point? What is your position sizing? What is your stop loss risk level? And for each position, key levels, how you're managing those positions. If this, then that. Again, you want to think in this framework. If Hood, which I was watching as my daily focus list, gaps up above the pivot, am I watching for a pull in back to support, or am I using an opening range breakout? And what decides that is basically the market analysis, your risk tolerance, the entry tactics you like to use. So think about those situations for every stock you own, as well as every stock you want to potentially own and enter. Step 4, trade execution. Pre-market screens that we like to use are earnings movers, gap ups over 5%, high volume run rate. That's how we like to find and focus on names during the day. Trade execution. This is kind of the time to put on trades for me, 9:30 a.m. to 10:45 a.m. I watch the price action of positions and top ideas, review the strength of the market, wider focus lists, monitor and manage alerts as I go on. And if a daily focus name triggers my plan, I'll enter. And based on price action, volume run rate, confirming action, all of that, I like to see sister stocks in the theme acting well as well. But once it enters, goes through the pivot, I'm in and managing my risk. Right. Anything you want to add about trade execution time, as soon as the market opens or whenever you like to put on positions?
Yeah, I like to, operate within the first 2 hours of the day. It kind of sets up the trend, and it gets quite clear. If you have a real good system and let's say I do nothing but look at the first 2 hours for a whole year, you'll kind of figure out how to operate within that time frame, right? And make decisions in that time frame. Some people say they never will trade the first hour, and they call it amateur hour. Some folks will only trade the first hour, and I'm one of those where I only trade mostly, when I'm making decisions on the direction of the market or where I feel things are going. I have a clear, I've done that so many times that I've become really good at it, basically. So it doesn't really matter where or which time of day you're executing, as long as you're doing that consistently is really what matters most. But what I tend to do is I have my focus list. When the market opens, I'm looking at the focus list only. I'm looking at, if the market is confirming the move, if the name I'm looking at is also confirming the move as well. And for me, it all boils down to price action. I'm not even, I would say these days looking at volume too much. It's purely price. Is it holding a level or breaking a level I was interested in? And is the theme in the market confirming that move? If it is, there's no reason for me not to act on something like that. So the first 2 hours are quite important for my trading.
Yeah, me as well. And the reason being, I like to manage risk at the low of the day. It's a clear level, and the low of the day is often set during this time. On breakouts, on say we gap down and do an oops reversal, the low of the day is often set right there. And then if the stock acts well throughout the day, you've got that profit cushion to hold through. Again, just getting ready for the open, here are some additional things that you want to think about. Double check alerts, stop losses, have your game plan ready and in front of you. have your broker software, DeepView open. All of you must use DeepView. Just kidding. But then, any focusing tasks you like to do, go walk your dog, meditate, listen to music, whatever gets you in the right headspace to be ready to execute how you need to during the day can be very helpful. Trade execution, list sorting. Right at the open, I like to sort my list by price percent change from the open. That gives me a sense of what stocks are performing off the open the best. But I like to sort also by price percent change today from the open, the daily closing range, volume run rate. All these are helpful for monitoring ideas, watch lists, and also identifying relative strength during the day. If we're down big and you see something up from the open or has a strong daily closing range, that's a sign of relative strength on that particular day. Then 10:45 to 3 p.m. it's kind of about monitoring or executing if there's additional setups that trigger, noting standout RS themes, group themes, all of that. You can kind of monitor the entire market. And then I call 3 p.m. to 4 p.m. decision time for any new positions. I watch the close and monitor, my cushion in new names. And if I have enough cushion, at least a few percent, I'll consider holding overnight depending on the market conditions. And then I'm always about adjusting any position stops if need be before the market closes at 4 p.m. Eastern. Brian, anything you want to add about the close and how you interpret the action at the close?
So depending on the type of market we're in, especially in downtrends, always the close matters the most. In uptrends, I would say it doesn't really matter too much where we open and close. When a trend reversal is happening, we're going to get strong closes to each of those sessions. Even if you study the recent correction, you'll see that even if we get an intraday pullback, and that intraday pullback is kind of a demand comes in and we get a strong close, that's your first sign that the market's about to do something special. In a market that's bad and in a downtrend below moving averages, and has no real liquidity, you'll see that we'll get really strong opens only for them to fade by, midday to afternoon session, and we'll get really weak closes. And that's a hallmark of, bad markets at the end of the day. So watch the close, but watch the close, especially in downtrending markets, because those are very important and they give you good information.
Yeah, perfect. So step 5 is after the market closes, you can go through your routine, review any additional positions, adjust stops if need be, do some quick post-trade analysis on how you followed your plan that day, make any notes about stocks that stood out, themes that stood out, analyze the market, groups, key stocks, run your post-market screens, update your watch list, and then create your draft daily focus list for the next day. So again, reviewing positions, adjust stops. I like to sort by weakest to strongest, plan for the worst case scenario, and focus on losses more than gains as stage 1 and 2 traders. Daily post-trade analysis doesn't have to be exhaustive, and you can do this on a daily basis, you can do it on a weekly basis, but give yourself a quick execution score. It can be a mental or on paper. Stage 3 traders and stage 4 traders can do this more mentally. Stage 1 and 2 need to add a column to the market cycle count log to track this, and don't overcomplicate this. Just take a few minutes and go ahead and do this. Daily market analysis, again, just run through your own routine based on what you do to analyze the market, analyze the top groups, top themes, and then the key stocks, and then, of course, developing your focus list for the next day. Some post-market screens that we like to use, if that will update here, is up on volume, liquidity, post-market gaps, earnings news. All of these things are things we like to incorporate. Here we go. And then update any watch list that you need to, your leaders list, universe list, gappers, IPO, HTF/momentum. All of these are watch lists you want to update. And then before we get to the key reminder, I actually wanted to share just an example of my daily routine just to show you what I do for the Trade Lab every single day to show you how it applies. So this is kind of my process every single day, my daily routine that I send out to Trade Lab members. And basically I have a quick note on the market action. I analyze the QQQ, the IWM, where they are in respect to their moving averages, how they performed today versus the expectation that I set. IBIT I use as a proxy for crypto and how this is performing. I analyze the overall trends out of 4. How are we performing? I look at the theme tracker, what are the existing themes, what are the developing themes for that day. I also use the heat map to get a visual look at, what stocks stood out today. This heat map is based on price percent change from the open and relative volume. So the biggest blue squares are what I'm focused on are IRTC. Duolingo had that huge earnings move. TTWO didn't make too much progress, but on big volume, so I'd want to watch what that one's doing. And I think it had a gap down in recent and then move higher. So I want to take a look at the big ones that stand out, and those are stocks to review. Then I look at that on an S&P basis. This was the DeFi leaders basis. This is that universe. And then I get into the leaders. So these are kind of the leaders that I track each day. They're just going to adapt and change based on what are the leaders currently. But often, it's the big growth names and big cap stocks, mega cap stocks. So Tesla, PLTR, NVIDIA. I take a quick note on how each of these are performing. Hood, it's going to be on my watch list for next week based on the tightness. So I'd watch for a breakout or some other type of entry tactic. Crowd, just trending. So again, just taking quick notes on how these are performing, and go through all the leaders here. And then it's more about the other stocks that are standing out to me that are on my weekly focus list. So TEM, watching how it looks on earnings. Duolingo, it's not actionable. It's potentially actionable the next day on day 2, but I'm watching personally for a range to build here. So I'm just taking a quick note on these. SDGR on earnings, Okta. So you kind of get a sense of, for each of these names, I've got levels marked. I'm marking down my observations, and this is really helpful in going back and seeing what my state of mind was about these stocks in the moment. Before they broke out, what was I watching for? Did I get it right? Do I need to adjust going forward? So all of these I take quick notes on. And then at the bottom, I talk about my overall watch list, my weekly focus list, and then my daily focus I highlight here. So early next week on Monday, I'm focused on Hood and Tesla, 2 potential market leaders. That is my focus. Those are the 2 stocks I'm focused on. I take a quick note on what the strongest themes are in my view right now, and then have a general situational awareness here, market thoughts about the end of the week, how do we perform, how are market leaders doing, and this kind of helps me know whether I want to be aggressive or defensive based on my actions. So that's a run through of my daily routine. Those are the key sections that I do, and to basically do this is I go through the DeFi leaders screen one by one, and take note of any key stocks that are standing out, setting up, updating my universe list, and then I go through that universe list to build this next weekly focus list right here. And then I go through those and say, what are the top 1 or 2, 3 names that I want to focus on the next week, and that becomes my daily focus list. So I want to pause here and see if there's any questions here, but I don't see anything. Yeah, TradeLab is my daily newsletter. You can find out more on traderline.com, and maybe Ryan, you can drop the link to that in the chat here. Here we go. So that's an application of how I do my daily routine. Ryan is going to be a little bit different. You're going to be a little bit different as well. But that hopefully should show you kind of the key steps that I go through personally, going from market indexes, groups, key stocks to stock setting up. That's kind of the main sections for me. So just to kind of summarize today's webinar, key reminder: simple equals robust. There's no perfect system, no perfect routine. You just have to keep going. Screening routine is the structure that sets you up for success. The 2 goals of screening are to find new ideas and monitor the market environment. And as you screen, be detective. Where's the money flowing? What are the strongest themes? What are the strongest stocks I should be focused on? And then create a daily and weekly routine which catches the stocks likely to be market leaders. Ryan, anything else you want to cap today off with? What are the most important things that you think people should take away?
Yeah, have tactical screens for different market situations. Have a routine that you follow on a daily and weekly basis. Have it written out. The more deliberate of a process that you have, the better you will be, and the quicker you will get to phase 3 or stage 3 that we spoke about in one of the first webinars. The goal of screening is not to be a shortcut as to what the market may be doing. It's to find the best ideas for you a little bit quicker, so you don't have to go through 12,000 stocks in the US markets. So people tend to get that a little confused. The third, I would say, is focus on consistent inputs over a span of time for consistent outputs. don't change your inputs every single day or every single week. You will kind of go in circles trying to find out what's working, what isn't working, etc. So give yourself some time. This is not a thing that you'll figure out in a week or a month. It will likely take a couple of years. And then when you do that consistently, it becomes second nature. And your pattern recognition through your daily routines and your weekend routines improves quite a bit. So,
Perfect. So with that, we'll take a few more questions. Again, I'll put up the link to order the handbook here. If you enjoyed today's webinar and found the concepts helpful, you're definitely going to enjoy the Trader's Handbook. Again, this is coming out in just a few weeks now. You want to order yours so you get yours as soon as possible. And we'll have more information about how to unlock these special bonuses when you order. And just to, I'll probably send that out next week actually about how to actually unlock that. So definitely go ahead and pre-order it. You can click the link if you're watching this live right there. And the link is also in the description for anybody watching on YouTube. Awesome, guys. Well, thank you guys for tuning in again, spending some of your Saturday with us. Definitely appreciate your time. Great question, great thoughts as well. So thank you so much. Again, if you found this webinar helpful, we really believe you'll enjoy the Trader's Handbook. We're really excited to get this resource out to you guys. And it's more than a book. We're going to be including bonuses such as market cycle model book, weekly charts model book, sell rules model book. Oh, Rise got his copy too here. We'll just wave it around. But yeah, definitely pick it up, and we'll have more information about how to unlock those bonuses later on. Ryan, do you have a particular chapter that
I think the last one with a whole bunch of charts. The book is 493 pages, so the last bit of it is all charts and examples and how to apply it, and I think that's the most amazing part of that book because it kind of puts everything together. So
yeah, my personal favorite is the post-analysis chapter because we really walk through in depth an example of how to analyze a single trade. That's chapter 10, and I think that will help a lot of people who maybe don't have a process set for analyzing and having that feedback loop. So I think that will help a lot of people as well. But thank you guys all. Definitely pick up your copy. The link will be in the description as well. But thank you guys all for tuning in, and we'll see you guys in future webinars. Cheers.